Okay, so let's go ahead and get started with today's session. So what we're going to go over today is we're going to go over a strategy called the opening range breakout strategy. And most people that know or trade this strategy, they'll basically tell you, or if you watch videos or read something on it, they're basically going to tell you that, you just take the trade whenever the breakout occurs, okay? The breakout of whatever opening range time frame that you're looking at, which we're going to go over, whether it's a 5-minute or 15-minute or 30-minute or hour, whatever that is. They're basically going to tell you that's when you take the trade, right when it breaks out. Well, I back tested that, and although it does have quite a bit of success, right? I've put my own spin on it, and I've added a few things to it, which I think gives it a much better edge, which I'm going to share all of that stuff with you guys today. And of course, you should put your own spin on it as well, that best suits your trading style, your risk level, the types of tickers that you normally trade, and so on and so on. So today we're going to go over what the strategy is. We're going to go over a couple of different ways to use the strategy. We're going to go over when you should take the trade, or when is a good time to take the trade. We're going to go over when you would not want to take the trade, and we're going to go over where we can put our stop losses, and we're going to go over where we can look to take profits, right? That's pretty much everything. That covers all of our bases, right? So that's everything we're going to go over today. I'm going to try and keep this as short as I can, but there's a lot of information that I want to put out. Even though the strategy is pretty simple, there's a lot of information that I need to put out about it. So it may take just maybe a little bit longer of a session. So okay, so the opening range breakout strategy. What is it, right? Well, it's basically taking the range of a specified time period, and what we're going to go over today is going to mainly revolve around the 30-minute time period. I'm not talking about looking at a 30-minute chart. I'm talking about just looking and identifying the high and the low of the first 30 minutes of trading after the open bell. So that's what we're going to focus on today, is a 30-minute. I'm going to go over some other ones as well. But basically, it's taking that time period and entering a trade based on the breakout of that range, whether it's a breakout to the upside or to the downside. This is a great strategy because we can use it for downside trading as well. A lot of us are really focused and geared towards looking for only upside trades. Well, we find that when we're in markets like we're in now, man, it's really beneficial to look for downside trades as well. So this is going to help with that. So I'll start off by saying that how I trade it. So I primarily trade this strategy on Tesla options, okay, not shares. It works on shares just like it does options though. And I pretty much trade it on a daily basis as long as there is a setup that I like. I'm also using a 30-minute opening range breakout window, which we will go over. You may have your own list of tickers that you want to implement this strategy on, whatever those may be. I have 14 different tickers that I like this strategy on. And just make sure that whatever tickers that you're using and whatever strategy, whatever spin you put on this strategy, make sure to back test it, right? You want to back test everything. Develop your own style here. Put your spin on it. Whether it be a 5-minute opening range or a 15-minute or a 30-minute or an hour, whatever works for you during your back testing based on your trading style, the types of tickers you trade, and all that kind of good stuff. So I also like I said a minute ago, not just on Tesla, but I like this strategy on some of the other bigger names that have a lot of option liquidity on a daily basis, right? So we, with that liquidity, we know we can get in and get out fairly easily, right? So we're talking about tickers like Nvidia, Apple, AMD, Microsoft, Facebook, tickers like that. And you guys have that list of 14 that's in one of our channels that you can refer to if you want to. And that's how I have the scanner set up. I have that particular trade idea scanner set up to only look for opening range breakouts to the upside or downside on those 14 tickers. And then I have a separate one that looks for other tickers. Okay. So, with that said, if there's no setup on Tesla that day, then that's when I will look at some of those other tickers as well. And obviously when they hit the scanner, I'll take a look at them too. But I primarily focus on Tesla because I check it first because I believe on average it offers better risk to reward, right? So, Tesla can move many dollars in a given day, whereas Apple may only move $4 or $5 in a day. Well, Tesla can move $4 or $5 in 2 minutes, So there's a lot more potential there, which is why I like to focus on it. So what I've covered so far, you guys might be thinking, well, wait, Doc, isn't this just buying the high or the low of the day breakout? Why is this any different, than doing that at any point during the day? Well, the difference is that during the first time frame, whether it be 5 minutes or 30 minutes, which are the two that I like the most, but right now in our current market, I'm using the 30-minute. Those windows of time are important. They're very significant because oftentimes, and I'll show you guys, the opening range is typically where the high or the low of the entire day ends up being, okay? Or at least very close to it. Not all the time, but oftentimes. I mean, you look at Tesla here. The first 5-minute candle, we're on a 5-minute chart here. The first 5-minute candle was the high of the day, right? So oftentimes that level, that first 5 or 30-minute window ends up being the high or the low of the day. So that makes it very important to pay attention to, obviously, right? And also, so let's talk about the 30-minute open range. So the first 30 minutes, high and low, basically that shows where all of the battling was taking place, right? The buyers and sellers were duking it out. And then after that time has elapsed, then you can kind of see, well, who's winning? Because typically after 30 minutes, most of the buyers and sellers from the initial bell chaos are already shaken out, right? They've already taken their profit or they've already, hit their stop loss or whatever. And this is one of the reasons that I like to focus right now more on the 30-minute than I do on the 5-minute, because in my opinion, after 5 minutes, that's not completed yet. We'll go over that more here in a minute. So basically, that kind of after that 30-minute window is hit, it kind of shows you, or where the trend may go for possibly the remainder of the day, because everybody's kind of finished with that that initial chaos. So some traders even use this strategy based on the 1 minute, the first 1 minute candle, right? But for me, that's not enough data, so I don't trade it with that 1 minute window. But I do trade it on a 1 minute chart, right? But I want more data than the first 60 seconds of the bell. So some other popular time frames for this opening range breakout strategy is the 5-minute, the 15-minute, the 60-minute. Some people even trade it on the 4-hour. But if you're trading on the 4-hour, you're typically looking at holding it overnight, right? So just back test it, take a look at all of those different windows, and find what works best for you. So some of the differences so the two most popular, in my opinion, I think are the 5 and the 30, like I said. So I'm going to go over a couple of the differences between the 5 and the 30. So the 5 minutes obviously is less data, right, than 30 minutes. So there's one difference. Oftentimes, the 5 minutes, the trades, like I said a minute ago, they're not settled yet. So there's potentially still going to be a lot of noise, right, and maybe even quite a bit of volatility after 5 minutes. You still have buying and profit taking going on. It can easily be more volatile. So I like to think of the 5 minutes as more of a scalp strategy. So if you want to trade that 5-minute opening range breakout, that's fine. But I look at it more of a scalp. And then I look at the 30-minute as more of a little bit longer trend direction, possibly for the day. So a little bit longer trade strategy. And I'll show you guys some examples of that. And keep in mind, the old saying that the bigger the time frame, the bigger the move, right? So if we're looking at, 30 minutes worth of data versus 5 minutes worth of data, we could possibly expect a larger move in that direction. Okay, so again, this doesn't mean that I'm trading off of a bigger time frame. I'm not trading this strategy on a 30-minute time frame or a 5-minute time frame. I personally trade this strategy on the 1 minute time frame. because I like to see more detailed price action, right, for quicker decisions. So if I'm looking at a 5-minute candle on the 5-minute chart, I'm not going to get as much information as I would looking at a 1-minute chart and looking at 5 different candles, if that makes sense. I'm just kind of dialing in a little deeper to take a look at this price action. And that allows me to make decisions quicker, right? But keep in mind, but while I am trading on the 1 minute, taking my trades on the 1 minute, I also have, I'm watching the 5-minute time frame as well. So a lot of these tickers, that I'm trading this on, these list of 14 tickers, they tend to follow the market. They tend to follow SPY, right? So I also keep a SPY chart up, watching it. And I think most of y'all already know that. So on one monitor, I have a 4 chart setup for this particular strategy. I'm watching SPY, I'm watching a Tesla 5-minute, and I'm watching 2 separate Tesla 1-minute charts, or whatever ticker I'm trading. 2 separate 1-minute charts with different indicators on those 2 1-minute charts. So the opening range will also give you support and resistance on one of the most important windows of time for the day, right? You're going to have that high and that low of that particular time frame, which is going to give you another couple of levels to focus in on. So obviously the 30-minute opening range breakout, and I'm going to just call it ORB, so I don't say opening range breakout 400 times today. So the 30-minute ORB high is obviously just the high of the first 30 minutes of trading after the bell. The 30-minute ORB low, obviously the low of the first 30 minutes of trading after the bell. So another thing that I like to look at is trend bias, and this is something that I kind of put a spin on this particular strategy. And what that is basically what I do is I take the first 5-minute candle, okay, and I take the high and the low of that first 5-minute candle. I divide that number by 2. Basically, that gives me the baseline of the first 5 minutes of trading. It's going to be the middle of that candle, right? And and that's where a lot of your volume comes in, in that first 5 minutes of, after the bell. There's actually an indicator on Thinkorswim that you can use for this if you want to skip doing the manual calculation. It's called median price, and it's just going to basically show you the exact middle of each candle. Just make sure that if you use that indicator that you're looking at it on the 5-minute chart so that you can get the baseline of that 5-minute candle. Okay, but it's a very quick and simple calculation. Like I said, you just take the high and the low, add them together, divide that number by 2, and there you have it. Very easy to do. So I use this level, this trend bias level, alongside with the ORB. So once the 30 minutes high and low can be identified, then I look to see where the majority of that trading during that 30 minutes took place. Did the majority of it take place above or below the trend bias level, right? And this period will give you your bull and bear zones. So real quick, I'm going to show you guys how to draw that stuff on your chart. Okay, so let me show you guys what we're going to do here. I'm going to draw these for you real quick so y'all stay up to date where we are. So we'll go over some of these levels that I like to draw here. All right, so we're going to draw. So let's look at that trend bias level real quick. So we're on a 5-minute chart. I'm looking at the first 5-minute candle. I see the high. You can see the highs and the lows right here. Okay, the high and low of that candle. So the high is going to be 886.87. So 886.87 plus the low is 872.59 divided by 2 gives us 879.73. Okay, so that's going to be our trend bias line. So 879.73. Change that in here. I'm going to name this stuff. I'm not going to abbreviate. I'm going to spell it all out so you guys know exactly what those lines are. But it doesn't have to be this big on your chart. You can just color code it. You can name it whatever you want, abbreviate. but I'm going to spell it all out so everybody knows what's going on. So this is the trend bias. We're going to show on the right hand side. We're going to make it, I like for it to be yellow, solid line. So that is our trend bias, right? Now let's go ahead and identify the 30-minute opening range high and low. All right, so we're going to look at the first 6 candles because it's a 5-minute chart. So 1, 2, 3, 4, 5, 6. So here we are. The high was actually at a resistance level up here that I had drawn on the chart, which makes sense. So the high again of that candle was 886.87. I'm just going to remove this for now so we can read this better. So 886.87. Okay, so we're going to say that this one is our 30-minute ORB high. I'm going to change this color to green, make it a solid line, say OK. Okay, one moment. Let me do this one more time. Share, change windows, make it this one, share. Okay, so we should be in business here. Let me know if you guys can't see, if y'all can't see my mouse moving or drawing lines. So anyway, what we did was we identified the trend bias line here, okay? And I told y'all how to do that. You just take the high and the low of the first 5-minute candle, divide by 2. That gives you your trend bias for the first 5 minutes, or your baseline basically for the first 5 minutes. And then we identified the opening range breakout on the 30-minute up here at 886.87. And then obviously this is the low. So we look at the low of this one, and the low on that one is 861.02. So let's draw that level. When I say 861.02. All right, we're going to name this the 30-minute ORB low. We're going to show the name so everybody knows what that level is. We're going to make it red. Solid line. Okay. Okay. So now we have our 3 levels identified, right? We've got our ORB high, our trend bias, and our ORB low. Now, for some of you that are more visual, you can do this. I don't do this manually, but you guys can do it. Like I said, if you're more visual, you can go to your drawing tools, go to this rectangle, and say 1, 2, 3, 4, 5, 6. So it's going to be after that candle there is after our 30 minutes. Make sure we're on 886.87. I'll have to change it. And so what we do is we draw a zone here, okay, from the ORB high to the trend bias line. 879.73 we need. It's not going to cooperate. So we're going to change these levels real quick. So 880 was 879.73 and 886.87. All right. Okay, now what we're going to do is we're going to draw. So I'll tell you guys what these zones are in just a moment. We're going to draw one here as well. Down to the low. So this line, what we do is we draw from the trend bias line down to the ORB low. 861.02. Hard to get these lined up. I'll just change them in here. So what we're going to do is change those figures so that they are correct. So 861.02 and 879.73. Is our trend bias. All right, we're going to change the color of this one to red. And we need to change the transparency so that it doesn't, we can see our candles. I'll put the transparency on 80. Click OK and OK. Now you have a very easily identifiable, zones, right? So we have, I like to refer to these zones. Let me get to my text here so I can type it in. Zoom it down a little bit. So I like to refer to this as the bull zone. And I like to refer to this as, guess what? The bear zone, right? So this is the bull zone, that's the bear zone. I refer to this, anything above that bull zone, as the breakout zone. And anything below that bear zone, I refer to as the breakdown zone. You can, whatever you want to use in your head so that you recognize what that zone means to you, feel free. But that's what they mean to me. So basically, when we're trading in this zone, keep in mind these zones are based off of that trend bias, right? They're based off of that first 5-minute middle candle. So once we're trading above that base, we're a little bullish, right? That certainly makes sense because this was the middle of that. So once we're trading above that, we're a little bit bullish. Once we get above that 30-minute opening range breakout or opening range high, then we're in the breakout zone, right? If we're trading below the trend bias, the first 5 minutes trend bias, then we're in the bear zone. And then once we break below that, then we're in the breakdown zone. Hope that makes sense. Okay, so we went over why. Okay, I'm going to focus a little bit on this trend bias, right? So why is that trend bias level important? So this can oftentimes indicate the trend bias for the day, okay, barring any intraday news that could affect the ticker that you're looking to trade, of course. But basically, if the green zone is significantly larger than the red zone, right, then you can possibly expect for the trend bias for the day to be higher, okay? If the opposite is true, obviously if the red zone is significantly bigger than the green zone, which is what we have in this particular case here on Tesla. This is Tesla on Friday, by the way. So if that red zone is significantly bigger than the green zone, then we can possibly expect for the trend bias to be lower for the day, right? And if the two zones are pretty even, then you could possibly expect for trading for that day to be mostly flat. Okay, it's not always the case. Obviously, there's never and never and never and always, but it can give you a pretty decent indication. Okay, so that's what those zones are for. And like I said, if you're more of a visual person and you need to draw the green and the red on there so that you can easily see it, then hey, that's great. Do whatever works best for you. I don't need to draw them on there. I just know that if we're trading between the trend bias and the ORB high, I know we're in the bull zone. And I know that once we're above the ORB high, I know we're in the breakout zone. Same thing down here. I know if we're trading below trend bias, but above the ORB low, that we're in the bear zone. And below the ORB low, we're in the breakdown zone. So totally up to you, however you want to look at it. Okay, another thing that is a good idea to keep track of is pre-market levels, okay? Especially if there's a lot of activity during pre-market. So I like to mark the pre-market high and the pre-market low. So let's see where our high was here. Looks like it was here, so 888.19. Yeah, so we're 888.19, looks like our pre-market high here. So let's go ahead and mark that on there. And I'm on the wrong one, just a moment. On all of our other examples, this is what I was telling you guys earlier. This is why I have all of those other ones pre-drawn, so that because doing these drawings takes a little bit of time. I don't want to waste everybody's time watching me draw. So all the other examples that we have are going to be pre-drawn, so we won't have to go through all of this. Okay, so we're going to mark this as a PM high. Pre-market high, and you can do PMH, abbreviate it, PMH, PML for pre-market high, pre-market low, whatever works for you. I like to make it green, and I like to have that line because I like for that green line to be different than the ORB high. right? That way, if I'm not having to look over here and read, I know that if it's a solid line, it's the ORB high, and if it's a dotted line, it's a pre-market high. Okay, let's identify the pre-market low, which was going to be here, and that is 872.05. So let's mark that level. I'm going to say this is PM low, and it's 05. We're going to show that on the right, and we're going to make this one red, dotted. Okay, so now we have those levels identified. There's you can also identify the pre-market mid level if you want to. Sometimes that will be a point to where, or a level where you might see a direction change. And all you do, it's basically the same thing as a trend bias. You just take the pre-market high, add it to the pre-market low, divide that number by 2, and it'll give you your pre-market mid. I do put that on my chart just in case, just as another reference of where I might see some support or resistance, right? Okay, I actually have a script that draws those levels for me automatically. So if you guys want that script for Thinkorswim, let me know, and I'll be happy to share it with you. Okay, so, and you know, this, as you can see right here, drawing these pre-market levels on your chart, look what Tesla did here. Right before it broke down into the breakdown zone, it actually came up to this pre-market low and saw resistance there. So a great thing to keep on your chart. Okay, another thing that I like to keep track of, and this is another spin that I put on this strategy. I don't know that I've not heard of other traders that do this, but I do it, and I'll explain why. Is I also track the previous day's high and low because I want to identify that trading range, that previous day's trading range, right? So are we trading above that previous day's high, or are we trading below that previous day's high, right? And the reason that I think that's important is because I think it gives the ORB strategy better success if we're trading outside of that range, because there are traders likely that are still holding a position from the previous day that are now trapped, right? They're trapped and their trade is red. So they're going to be looking to get out of that trade. And you know, if they're looking to get out, if looking to sell, then that's going to help you on your move down. And if they shorted yesterday and the price is going up and breaking out of that range, then they're red as well, and they're going to need to cover. So they're going to need to buy, helping push the price back up. It also offers you 2 more points of reference for support and resistance, right? So let's identify those levels. So this was on Thursday. So our low on Thursday was 874.10. So let's draw that real quick. So 874.10, and we're going to say that this was, you know, you could do previous day low, PDL, but I'm going to spell it all out so that everybody knows exactly what that level is. We're going to show it. It's a low, so we're going to make it red. Going to make it dotted. There we go. So there's previous day low. Now also we want to identify the previous day high. In this case, it really doesn't matter because we never even got close to that level. But the previous day high was 918.15. I mean 918.50. Let's go ahead and mark that on our chart. So this was previous day high. We're going to show it on the right. We're going to make this one green. Make it this dotted. And now we have our previous day high. Okay. So this is what we're looking at. So we have all of these levels on our chart, right? We have our pre-market high and low, our previous day high and low. And we have our trend bias and our ORB high and low. So we have all these different levels for to pay attention to for reference, right? And this probably sounds like a lot of work. Like you're thinking, man, that's a lot of information that I need to gather and put on my chart really quickly. Well, in reality, it's not. It only takes a couple of minutes. As a matter of fact, you can identify the previous day's range the day before, right? Whenever the closing bell rings, you can put those levels on your chart. That way they're ready to go for you, the following morning, right? And you can also identify the pre-market high and low, mid if you want to mark that too, as soon as the bell rings. So after the first 5-minute candle closes, you can identify that trend bias, right? Then you have another 25 minutes before you're going to identify your 30-minute opening range high and low. So it sounds like a lot, but you're not doing them all at the same time. So I'm just doing them all at the same time now because everything's already happened on the chart. So oftentimes you can identify these levels even earlier. If you have a pre-market high, if the bell's coming up in 5 minutes and your pre-market high in this case was 9:18:59 and the bell is opening in 5 minutes and you're trading at 8 something, well, you're probably not going to break that pre-market high in the next 5 minutes. So you can go ahead and draw that pre-market high even before the bell rings. So oftentimes you can get those levels drawn early. Okay, so let's move on to how do we trade this, right? Well, first you want to identify the possible trend that your stock will have for the day, okay? Did it recently have good or bad earnings? Does it have some other significant catalyst recently? What does the daily chart look like, right? What is the longer term and shorter term trend on the daily chart? Right? So how is the overall market looking today? These tickers, a lot of these tickers will follow the overall market. So what does it look like for the day? Are we trading in yesterday's trading range? We're going to go over that some. Yesterday's daily high and daily low. Are we trading in that range or are we out of that range? So did we have positive or negative economic data this morning? Right? Did Russia invade Ukraine? Right? Did the Fed remind us about rate hikes again? So these are all things that you want to take into consideration before looking to take these open range breakout trades. You can basically what I'm trying to say is that you should already have a pretty good feel for the expected direction of the ticker that you're looking to trade. Okay, it's okay to be wrong. If you thought it was going to go up and it went down, but that's fine. That just means that maybe you just don't take the trade, right, that day. But the point is that don't just blindly grab a trade based on this strategy alone because it broke out without doing some homework, right? So as we know, oftentimes breakouts fail, which is why we want to put as many pieces of the puzzle together so that we can better see the overall picture. And this will allow us to have a better edge on the trade itself. So with this strategy, you can be as aggressive, as you want to be, right? And this certainly will depend on your other signals. Personally, when I'm trading it, I will typically wait for a 5-minute candle to close above or below the 30-minute ORB, right? So here, we don't have confirmation. But here we did, because this 5-minute candle actually closed below the ORB low, okay? So that's what I do as far as on the 30-minute ORB. I wait for that 5-minute candle. Now there are times that I don't, okay? And I'll give you an example. There's sometimes if I have a solid entry signal prior to that, then I'll actually take it, okay? And I actually did this on Friday with Tesla puts. I think you guys will recall that when I mentioned it in Discord. So I actually took the trade before it broke below the 30-minute ORB low. There were some other factors in place as to why I did. Tesla had been pretty bearish since the bell, right? We had, look at trend bias here. And, it tried to pop up and got rejected on that 887 resistance level. That's, a key area on the on the daily chart. So it was pretty bearish, and it tried to bounce back up and it got crushed back down. So that's one thing. and SPY wasn't doing very well. Okay, there were several mentions of the tensions increasing with Russia and Ukraine. You just need to weigh all of those different signals, right? Another thing that I liked is that it got a pretty nasty rejection here on this pre-market low, right? This pre-market low right here. Look at that that candle there. Got a pretty harsh resistance rejection there. Okay, as far as the 5-minute strategy, I just want to mention this. The trade, instead of waiting for a 5-minute candle to close for confirmation, typically traders are waiting for a 1-minute candle to close for confirmation on that ORB breakout. Now that's using the 5-minute ORB, not the 30. Some traders will be more aggressive, and they'll set up a bracket order and have the trade just sitting there waiting for the instant that the price breaks out for a quick scalp, right? These trades are fine. You just, and they can actually, if it's a bracket order, they can actually take the emotion out of the trade because the entire trade's already set up and ready to go. You don't even have to watch it, right? Your stop loss is in place. Your profit stop is in place. And then, that would allow you to take a look at some other tickers, that you want to see, what else is moving. You may even set the bracket order up so that it leaves a small auto play. And that way you can come back and check it in a little while and see how it's doing. And you can place also a one cancels the other on both sides. So what you would do is you would do an OCO order on the breakout or the breakdown if you're not sure of what the direction is going to be for the day, right? I don't do that, but some people do, and that's fine. Whatever works for them or whatever works for you. And what happens with an OCO order, if you have an order basically that's set for the breakout and you have one that's set for the breakdown, well, whichever one triggers, it cancels the other one, which hence the name of the bracket order, which is OCO, one cancels the other. Okay, so if your platform has a capability like Thinkorswim does, you can also set chart alerts, right? So if you want to look at some other tickers, you don't want to be staring at Tesla the entire time at the bell, maybe you want to be checking something else, you can set a chart alert to let you know exactly when that breakout happens. And then you can wait for your confirmation at that point. Okay, so where would we put our stop losses on this type of trade? Well, you have a lot of different options, right? So just make sure, obviously, that whichever option that you do go with fits within your risk management plan. That's first and foremost, super important, of course. So you could do it based on, just a fixed target, based on your maximum risk that you allow for that particular trade. I typically don't do that. I typically prefer to focus on key levels, as you guys know, and I'll make my trade based around my risk management, right? I don't do the opposite. I basically let the key levels determine where my stop loss is going to be, therefore how many shares I can buy or how many contracts that I can buy. Because we all know an improperly placed stop loss can just result in a donation to the cause, right? So then you get to then you get to watch the trade that you were stopped out of go in the direction you thought it would, which that's never fun. So this is why it's important to be taking trades also as close to these levels as possible. So it increases your risk to reward ratio. So another place that you could put a stop loss would be at a fixed target based on a support or resistance level. Now that's much more up my alley, right? For a tighter stop loss, you can actually place your stop loss. Let's say that you took the trade here, right? When it got rejected off of the pre-market low, you could actually place your stop loss just above that particular candle, right? Just above that high. Because that's where it met resistance before, maybe comes back up there and meets resistance again, so you put your stop loss there. That's obviously a much tighter stop loss, but it is certainly an option. Okay, you can also place it just above the high or the low, or just above the high or just below the low of the day, okay, of the day so far, where resistance has been met at that high and support has been met at that low. You can also place it just above or below the previous day's low or high, okay, depending on how close it is. So let's say that we took this opening range break down here, this trade on this 5-minute candle close. Let's say that we took that trade. Well, our pre-market low is not too far off, right? And our previous day low is not too far off. So those are maybe some areas that you might consider for a stop loss there, versus just throwing a stop loss here because it's $865 even. Well, that doesn't make sense. It's better to identify key areas and then let your risk management revolve around that. Hope that makes sense. And some people even place your stop losses around Fibonacci levels. That's totally up to you. Okay, so let's talk about, and we're going to go over some examples, some more examples other than just Tesla. I think I have like 5 or 6 examples that I'm going to show you guys of some of these ORB trades. Okay, so where should we take profit? So again, you can take profit at a fixed target based on a support or resistance level. Are we breaking through, or are we reversing there, right? So that's something that you could focus on. You could do it just based on a fixed risk. Maybe you want to look at 1.5 times risk for your profit, or 2 times risk for your profit, right? I like to pay more attention again to volume, price action, coupled with support and resistance levels, key areas. Because just because you want to make 2 times your risk doesn't mean that the trade's going to go there, right? So, we're better off, in my opinion, paying attention to key areas. Okay. Somewhere else you can take profit. You can base it off of ATR. Some people are real big on ATR. You can base it off of that. You can take profit based on a moving average. For example, you can take profit as soon as it breaks below the 9 or below the 20 or whichever EMA you like to use, right? Because we certainly know that once it starts breaking below the 9 or the 20, we know that it's getting weaker, right? So obviously another time you would take profit is if you see signs of a possible reversal incoming. Volumes, if you're ripping up, volume starts to slow down, right? Candlestick formations, you're ripping up and you get a hammer candle up there, or you get a doji up there, right? So candle formations are something else to pay attention to. RSI divergence, that's what we went over in our last session. RSI divergence can be used as a possible reversal signal, or even RSI itself. Once you start getting up into this, mid 70s, high 70s, over 80 RSI, you should be very watchful. And don't be afraid to take some profit quickly on these trades, right? So again, it's never, ever, ever a bad time to take profit. This will give you a little cushion in your trade in the event of an unexpected pullback or reversal if you're trading to the downside. You can always leave a lotto play in there for possible continuation. For example, let's say you purchased 4 contracts. Well, you could sell one fairly quickly, right, at your first target level for a quick cushion profit, almost like a scalp, right? You sell your second at whatever profit target you have set there. You sell your third at that profit target, whatever you have set there. And then on your last contract, your fourth, maybe you leave it as a lotto play, And at that point, you could either keep your stop loss just above your profit area, just to, right where your buy-in is, or you can move that stop loss to your first profit target, second profit target, third profit target, totally up to you, or throw in a trailing stop loss. You have tons of options there. A lot of people will take profit based on Fibonacci levels, right? And let's take a look here. I don't think I looked at this, but let's take a look at here if we did put some fibs up here. Let's see what we have. So we're going to take the ORB high, since we're trading to the downside here, down to the ORB low. Trying to match it up here as best I can. So yeah, there's your fib levels, right? So if you want to take profit based on your fib levels, you could take some profit at the 27, at the 41, at the 61.8, This actually went down further than the 61.8. So you can look at fib levels to take profit. Another great time to take profit, and you guys know this for a long time, is anytime that green figure looks really nice to you, that's a great time to take it, right? Because you have to ask yourself, well, would you be happy with that amount of money in your pocket? Yeah, sure, right? Even if it continues on and you leave money on the table, that's okay. But that's also what lottery plays are for. You can always leave a lotto in there. All right, so let's talk about the flip side of that. Let's talk about when we probably shouldn't take the trade, right? So obviously, when the trade setup doesn't fit within your risk management plan, okay? There's many times that I see a nice setup and I want to take the trade, but where I would need to put my stop loss versus where I could take profit, it just doesn't fit, right? Even though it looks good and I could probably make some money on it, maybe I don't take that trade. Maybe I just scalp it versus trying to take a little bit longer term trade, right? So if it doesn't fit within your risk management plan, just don't take it. Because the great thing about the stock market is we're going to have lots and lots of opportunities pretty much on a daily basis. So you don't have to focus just on one particular trade. Okay, another time you wouldn't want to take the trade is when you haven't done any homework prior to your trade. Therefore you don't really have a good feel of the expected direction. Maybe you got up late that morning, you didn't have a chance to do your homework. So you don't want to take the trade when you don't have a plan for your trade. You don't know where your entry is going to be, where your stop loss is going to be, where your profit targets are, and so on and so on. You always want to trade with a plan. It takes the emotion out of your trading, which is the majority of traders' problem, is psychological and emotions, right? So another time you don't want to take a trade is when the price action doesn't look good leading up to the breakout, right? There are some times that even though we get a breakout, the price action leading up to that breakout just doesn't look all that great. So maybe you skip that one, right? And you wait for a better looking opportunity, because it certainly could be a false breakout. So let's say that the breakout to the upside happens, right? But it happens just below a key resistance level on the daily chart. Well, is that a trade you want to risk? That's up to you, right? It's probably better to wait and see if there's a breakout of that particular resistance level as well, so you aren't dealing with an immediate pullback as soon as you enter the trade, because that's never any fun. Also, personally, I don't like taking a long or call position when we are trading below the breakdown zone, right? Because obviously the stock is pretty bearish, at that point. Now, that doesn't mean that you can't take a scalp on it. Obviously these small bounces, there is some money there. You can take a scalp on those, but I wouldn't be hopping into that trade expecting for, a huge run. But there are times when you have very good signals of a reversal taking place where you may do that. So again, that's totally up to you. Look at your different signals. That's just kind of personally, we had that example, I think on Friday. Yeah, it was on Friday, where one of our guys in our group wanted to go long. He wanted to take some calls on Tesla when it was down there and deep into the breakdown zone. And, I was trying to talk him out of doing that. And, of course, minutes later, it just tanked on down and made another new low. So you have to be very careful. Know which zone you're in, right? And keep that in mind when you're thinking about taking a trade. Okay, so you also don't want to just take like we talked about earlier, you don't want to take every 30-minute ORB breakout that you see, right? You want to identify if a stock should be moving up or down on a given day and use this strategy in conjunction with that as well as your other signals. Like most strategies, this is not a standalone miracle, works 100% of the time strategy, right? But when you couple it up with other indications and other signals, it can be very accurate. So let's take a look at well, first, let me get rid of these fib levels here so we can see a little bit better. So you guys can see, I'm sure you've been staring at this for a while, but you guys can see that this was a pretty nice trade, right, when it broke down. Now, would we have been paying attention here at this 856 level? Absolutely. Keep in mind, those blue, all of those blue price lines are support and resistance lines from, you know, higher time frames. So, and we did see that it did respect that level, and then finally it broke down. But man, what a great trade, right? So let's look at a couple of other examples. And I did point that out again. This is why that pre-market low and pre-market high and previous day highs and lows can be important in putting them on your chart, because look what happened there at that pre-market low. I mean, big rejection. Okay, let's look at, what are we looking at here? Boeing, I think. Yeah, let's take a look at Boeing. So I've already drawn all this stuff for everybody. I didn't put all the levels on there. Basically, I just put the previous, I'll put the ones that mattered. I put the ORB high and low, the previous day low, because that we broke down out of that range. And of course, I put the trend bias. And I colored everything so you guys will be able to see it easily. So basically what we had here on Boeing is we had a false breakout right here, right? It just barely broke out, but it did. But for those traders that didn't wait for confirmation and they just grabbed that trade as soon as it broke out, well, it, for sure hit their stop loss, right? So this is why it is a good idea to wait for confirmation, unless you have something obvious. Like this is obvious, right? We don't need to wait until all the way down here until this 5-minute candle closes. These are just things that you want to keep an eye on while you're watching the trade. But had someone taken this trade here on the breakout, it wouldn't have worked out for them. But here, once again, do you need to wait till we close all the way down here? Well, maybe you do, if that's your rule. But, once you see that this is dumping pretty hard, maybe you hop in a little bit earlier than waiting for that particular candle to close. I wanted to point that out with Boeing. And keep in mind, these are all from Friday. I'm not cherry picking any of these. Every single one of these tickers that we're going to look at today are in that list of 14 that I'll keep an eye on. Okay. So you can see that, obviously once this broke out, it was still a nice trade to the downside, right? Depending on how long that you wanted to hold it for, take a look at it. Ask yourself, hey, where would I have put my stop loss on this trade? Would I have put it just above the ORB low? Would I have put it at the top of this candle? Where would you put your stop loss here, right? And then see if it would have worked out, right? This is how you do your back testing. So this one basically just barely broke back above the ORB low, looks like twice, and then got knocked right back down. Okay, let's take a look at our next one is Facebook. Okay, so here's Facebook. Again, something I forgot to mention on Boeing, I want to show you all one more time real quick. So again, a couple things on Boeing. So once we got below this previous day low, well, we're not trading in yesterday's range, right? Now we're trading below yesterday's range. So everybody that was holding yesterday long, well, they're red, right? So they're going to have to exit their position. And another thing to keep in mind is as we're looking at these charts, take a look at this opening time frame, right? So where the green starts here and the red starts here, that's after the first 6 candles. So that's after the first 30 minutes. So as you can see on these tickers, like I said, when we very first started this session, oftentimes that first opening range time frame is the high or the low of the day, right? So you can see here, it was the same for Tesla. That was the high of the day. Same here for Boeing. That was the high of the day, basically, during that time. I'm sorry it broke out a little bit here, but just barely. But pretty much it's at or near the high or the low of the day. So that's why those levels are important to focus in on. Okay, Facebook, same thing here. During that first opening range breakout, the first 30 minutes, that was the high of the day, right? Never got any higher than that. And we had a breakdown here. Once again, totally up to you whether you want to wait till that candle closes. But I wanted to show you this one because I want to show you the trend bias. So that trend bias, take a look at it. It's pretty much 50-50, right? So what could we possibly expect for the trend to be for the day if our trend bias is pretty much even? Well, we can expect pretty flat trading, and that's pretty much what we had. I mean, we primarily traded in the bear zone, of course, but there wasn't any significant moves, right? It was pretty much just kind of ticking up and down here and there, right? What was that, about a $3 range or so, somewhere around there? So I wanted to point that out to you guys. Okay, let's look at Nvidia. Show that as an example here. Okay, same thing here on Nvidia. I marked the ORB high and low, the previous day low, and the trend bias. So let's take a look at this one. Look at the trend bias. Trend bias is obviously to the downside, right? Again, the first 30 minutes of trading, that was the high. That was it. As a matter of fact, the first 5-minute candle was actually the high. So that's why these are so key to focus in on. And once we had our 5-minute confirmation candle break below here, we broke down pretty good. Had a little bit of bounce here, came back down. So again, if you had put your stop loss, let's say at the previous day low, or if you'd put it just above the ORB low, it would have never hit your stop loss. And you could have just taken profit whenever you liked down through there. Let's take a look at this one again on our fib levels and see how that did for taking profits. Pretty solid, right? So, if you use those fib levels, you can take profits at the 27, you can take profits at 41 if you want to, 61.8, whatever, right? But it ended up going down even well below the 61.8. Okay, so let's take a look at AMD, another one that's on that list. So AMD, take a look at the trend bias. This one was a little bit tricky, right? Because trend bias said that we're likely to be trending down for the day. But it really wasn't right in this particular case, because even though we did break below the ORB low and we were able to make some money on that trade, it actually went back up. And by the end of the day, it had actually broken the ORB high, right? So this is why you want to back test these things. I don't know if AMD had some news on Friday that made it pop back up. I'd have to look. But those are all things to certainly keep in mind. Okay, let's look at, what's our next one? QQQ. Keep in mind, these things work on QQQ, SPY, IWM, UVXY, whatever you want to take a look at. Okay, so this was QQQ on Friday. Our trend bias was to the downside. Obviously, a much bigger red area than we have green area. Again, the first 30 minutes of trading was our high, and if you see, the first 5 minutes of trading wasn't the high. The first 30 minutes was. I really like to focus right now, especially in the market that we're in currently, on this 30 minutes, not 5 minutes. Although 5 minutes opening range breakout is a popular time frame. Okay. So once we broke down here, we did not have confirmation on this candle, but we did have confirmation on this candle. So we would have taken the trade around like 343, and we ended up hitting a low of somewhere down here, 339, right? And it never came back up before making that low and would have stopped you out wherever you placed your stop loss up here. And so another example of a nice trade there on QQQ. Let's take a look at Apple. Okay, so Apple, same thing here. The first 5 minutes or first 30 minutes, however you want to look at it, was the high of the day. Okay, we had a lot more trading under the trend bias for the first 30 minutes than we did above the trend bias, obviously. So we could possibly expect, going off of that trend bias, that we should have, we should be trending down for the day, right? That's the expectation. So we had confirmation, 5-minute confirmation close here. So this is where we would have taken the trade. Maybe it would have stopped you out here. I don't know. It depends on where you put your stop loss. Previous day low is pretty close, so you could have maybe put your stop loss just above that level. If you had, you could have stayed in the trade, made a little bit of money. But it tried to pop back up here, sold off again, popped back up here, sold off, popped up here, and then really that's where it crashed. So, just take a look at those charts and just ask yourself, okay, where would I put my stop loss? Would that have fit in my risk management plan? How would this trade have worked out for me? Just do all of that stuff during your back testing so you can get a good feel for how this works. So let's look at Microsoft, MSFT, another one that's on the list, of course. And again, we have more trading below the trend bias line than we do above, so we can possibly expect for the stock to move down for the day. The first 5-minute candle, or first 30 minutes, however you want to look at it, was the high of the day. Again, once we broke down, it looks like this candle here was our confirmation that we broke down. And keep in mind, when these levels are really close, like this pre-market low and this ORB low, you can just take that off of there. You can just remove it because it's close enough to where it's really not going to make a huge difference, because we all know that these levels are just areas. It's not necessarily to that penny, although sometimes it is, but keep in mind it's just an area to focus on. So if you have those two that are really close together, just dump one of them, right? And focus on one of the two. Totally up to you, whichever one you pick. I would personally stick with the ORB low. Okay, so this would have ended up being a good trade depending on where you had put your stop loss here on Microsoft. Okay, so so basically, let's just do a quick recap, right? So this strategy, it's as you guys can see, it's pretty simple, right? It's pretty straightforward. Basically, there are 5 things that you need to do. Okay, so you need to identify your previous day's high and low for your trading range, right? You want to mark those levels on your chart. The second thing you want to do is you want to identify the pre-market high and the pre-market low and the pre-market mid if you want to, and mark those levels on your chart. Those are other areas where you could see support or resistance. And the third thing you want to do is you want to identify the trend bias, right? By adding the first 5 minutes of trading high plus the low and divide that number by 2. Mark that level on your chart, right? The fourth thing you want to do is identify the high and low of the time window that you're wanting to use for your ORB strategy, be it 5-minute, 15-minute, 30-minute, 60-minute, whichever one you find works for you. Identify that high and the low. And the fifth and last thing that you want to do is you want to make sure and use this strategy in conjunction with your other signals, okay, for a better edge on your trades. And don't use it as a standalone entry, right? As a standalone entry signal. You want to pair it up with other signals that all are agreeing, that's saying, yes, this looks good. This looks like a trade that that you should take. Okay, so I'm going to stop the recording there, and we'll get to some questions.